Tuesday, October 6, 2020, Maneco 64, home of alternative economics and contrarian views. So the Insane Monetary Fund, or IMF, of course, it stands for International Monetary Fund, but I think the name needs to be changed. And why do I say that? Well, they keep doing the same thing over and over again, and it keeps failing every time. They're calling for more debt now. They use the term investment, which is a euphemism because governments don't invest, governments spend. Governments don't have any money. They tax the private sector. They don't care how the money is spent or invested. So yesterday, it was announced that the IMF is calling on rich nations to boost public investments. Notice how they use the word investment and not public spending. So it says here, fund downplays debt concerns and calls for infrastructure spending for COVID-19 recovery. I'm not going to go through the article. Be as it may, they're calling for more and more Keynesian spending, more government expenditures, more taxation. You see, the IMF is a globalist institution. They do not trust individuals. They do not trust the free market or free enterprise. They always have to keep interfering. And I would say, though, the IMF is the arm, of course, of the U.S. Treasury, and it is an arm of Wall Street, an international arm. The United States has a veto in everything that happens in the IMF, the U.S. Treasury, that is. And we know that the U.S. Treasury and the Federal Reserve are working together now. We know that the private international banks are owners of the Federal Reserve regional banks, of course. So the IMF has been indebting and bankrupting and pump and dumping emerging market countries for decades. You go to Latin America or other emerging market countries, and IMF is like a four-letter word. People hate the IMF in these countries, but for some reason, the politicians keep allowing the IMF to lend money to them. And this money comes through the banking system. This money, of course, is backed by the taxpayers of the world, especially American taxpayers. They get left holding the bag as well because all the lending is done in US dollars. There's more and more dollars issued. Also, countries like Argentina, Brazil, and others, or Turkey, or even Greece, what happens is the IMF pushes politicians to borrow all this money for all these useless projects. And maybe there are one or two that did well, but projects that just line the pockets of big corporations, and then these projects fail, countries go bankrupt, and then the countries are forced to sell all the hard assets, all the quality businesses, utilities to the international banking cartel and the big corporations. And that's how they do it. I do, of course, recommend John Perkins. He talks about that in the Economic Hitman book he wrote years ago about this, how the IMF and the World Bank as well, for that matter. So now we have the IMF pushing the rich countries to do that. And there's a lot of cognitive dissonance out there because yesterday the Chancellor of the Exchequer here in the UK was saying that he's going to be really frugal, that he's going to balance the budget. But you can really not believe that. Back in 2010, his predecessor, Osborne, said the same thing, that the books would be balanced by 2015. And here we are in 2020, and we have a huge budget deficit. Just to give you a little bit of proof of why the IMF is bad news, And of course, it was Albert Einstein who said that the definition of insanity is doing the same thing over and over again and expecting different results. So let's go through some of the IMF's actions here. We've got an article here, BrettonWoodsProject.org, from October 3rd, 2012. It says IMF's incompetence and failures in Europe led to suffering. So this is about the European sovereign debt crisis and the IMF's role as a member of the Troika. It says the IMF's role as a member of the Troika, the grouping of European Central Bank, European Commission, and the fund in the Eurozone crisis is attracting new criticism. The deepening recessions in many Eurozone nations has brought the efficacy and appropriateness of Troika-led reforms into question. And here's the kicker. It says criticisms of the fund's European involvement includes the claim that it risked its independence as part of the Troika. Support for this view has come from the leaked resignation letter of a 20-year IMF veteran, Peter Doyle, who resigned as an advisor in the IMF's European department in July. Doyle accused the fund of failing in its surveillance function by having suppressed publication of problems in Europe that had been identified well in advance, so much so that the fund was consequently playing catch-up and reactive roles in the last-ditch efforts to save Greece. So that's the IMF for you. Let's see, another article here. This is from July 6, 2015. The big lesson from the Greece fiasco: don't let the IMF meddle. This is more recent here. Argentina fiasco should prompt reflection at the IMF. The fund's biggest ever program was poorly thought through, and it's bankrupted the Argentine government again. And who was the person pushing for this program? Well, it was the now head of the ECB, Christine Lagarde. There she is behind bars. This is my NDECB mug. She was the head of the IMF. Why is she behind bars? Well, because she was tried in a special court in France about 4 or 5 years ago, and she was found guilty of a criminal offense and given a 1-year prison sentence. Of course, she didn't serve that sentence. She remained as head of the IMF, and then she became president of the ECB. And the IMF seems to attract some shady guys and girls, of course, to head this institution. Dominique Strauss-Kahn, a few years ago, was arrested while being the managing director of the IMF. For financial and sexual scandal. We have the former head of the IMF as well, Rodrigo Rato from Spain. This guy has been tried for corruption in Spain. He has been acquitted just about a week ago. But this is the kind of people the IMF is headed by right now. The head of the IMF happens to be on the board of trustees of the World Economic Forum. Her name is Kristalina Georgieva. Well, she's been trained by the globalists. She's gone to all the right schools, like London School of Economics. She's gone to work at the World Bank. She's studied at MIT. Her grandfather was a Bulgarian revolutionary. Her father was a civil engineer who supervised state road building projects. She worked for the World Bank, and now she's involved with the World Economic Forum. And a lot of the projects, you can bet, will be related to the World Economic Forum's fourth industrial revolution, to their great reset. Well, let's see if the IMF succeeds in pushing this agenda. Let's hope it doesn't, because, as I said, it's the insane monetary fund. But why do countries keep going back to the IMF? Well, because the politicians involved in these countries, they always benefit from it monetarily. There's a lot of corruption, of course. The general public, of course, are the ones who are left holding the bag. So here we are, the IMF trying to push the what they call the rich countries into more and more debt. It's not going to help. It's only going to help really the political class, Wall Street, and big corporations. It's not gonna help any country. If the IMF was such a great institution, we wouldn't have third world countries anymore or emerging markets. Those countries would have developed very well. So I would say the IMF is a wolf in sheep's clothing. And you just need to look back at what they've done in Latin America and other emerging market countries to keep those countries in poverty, to sell out their natural resources, their important assets as well, like public sector, utilities. And Greece, of course, is a big example of that. So now let's look at the markets. Yes, the stock markets did very well yesterday in the US. The Dow was up 1.68%, S&P was up 1.8%, Nasdaq was up 2.32%. But I would also say that there was a bad signal yesterday, in my opinion, was that the 10-year yield spiked 7 basis points higher. And you might say, well, that's because the stock market did very well. But in the whole of September, the stock market moved higher several times like it did yesterday, and yields didn't do anything or even went down. So I think we need to keep an eye on that. Why is the 10-year yield and bond prices so important to other financial assets? Well, because every financial asset in the world, be it stocks, bonds, and other things like derivatives, are priced off the risk-free rate of return of the 10-year yield or U.S. Treasury. And if that yield spikes up very quickly, it screws up with the valuations of these assets. So you see here that back in March, when the stock market was crashing, that 10-year yield spiked from a low of almost 0.3 to a high of almost 1.3. So a 1% or 100 basis points spike. And that's when the Fed and other central banks around the world had to come out and throw everything, throw the kitchen sink at everything and save the day. So if we go through 0.8 here, look out. I think we need to keep an eye on the Treasury yield. Gold and silver, of course, did very well yesterday. Silver outperformed. So right now, gold is down a little bit. It's at 1907.50, down just over $5. Range has been 1916 to 1901. 1920.23 is the key resistance. Silver outperformed yesterday. I think we got up to as far as 24.50, maybe a little higher. Right now, we're down 14 cents or 0.57% at 24.20. Range has been 24.19 to 24.45, so we're near the lows. The Dow futures down 60 or 0.2%. S&P is down 1/3%. That's the futures, of course. Nasdaq 100 future is down 2/3% or 65 points. Currencies, sterling is down 1/8% at 129.61. The euro is down 0.1% at 117.70. And the dollar is down 1/8% versus the yen at 105.58. So mixed bag for the currencies. Oil is fairly firm. WTI is at 39.50, up 1/4%. So before I finish off, just to let you know, I think Lagarde of the ECB and Powell of the Fed are speaking today at a virtual conference a little later in the day, maybe in about an hour for Lagarde and a couple of hours for Powell. So we could see even bigger moves in the markets in treasuries. So if you enjoyed this video, make sure you hit the like button. Please share it far and wide. Think about subscribing to the channel if you haven't yet. So I wish you all a great day. Take care. Bye.